Thank you, everybody, for joining us today. And a special thank you to Professor Jonathan Glater and Attorney General Becerra for joining us for this very important conversation. And truly on behalf of the 4 million student loan borrowers in the state of California and the 40 million across the country, I just want to say how grateful we are to Attorney General Becerra for his leadership and steadfast efforts to protect student loan borrowers and help end the student debt crisis. So just to set the stage today, and many of you may know this, there is now $1.7 trillion of student loan debt in America. That means there's more student loans than there are car loans. There's more student debt than there is credit card debt. 45 million Americans receive a student loan bill each and every month. And unfortunately, student loan borrowers are really hurting. And I know we're going to talk about this more today, but just to give some context, more than 1 out of every 4 student loan borrowers are actually behind on their payments. And this doesn't even include the countless others who are making payments every month, but struggling across their financial lives because of the impact of this historic debt. And this is all true even before the pandemic ever hit. Since Donald Trump took office, there has been now more than $270 billion of student debt added and hundreds of thousands of more borrowers. In just California alone, we've seen nearly $20 billion of debt added in the last 4 years. And here's why this is important. Because this isn't just a student debt crisis, this is a consumer protection crisis. There's a cottage industry of predatory players seeking to get rich off the plight of struggling student loan borrowers. From banks to small scams, from private student lenders to for-profit schools, from student loan servicers to debt collectors, private equity firms to social media. We have seen companies build their entire business models premised on abusing student loan borrowers. And unfortunately, for the last 4 years, the Trump administration has sided with industry over borrowers at every turn. Predatory schools over defrauded borrowers, servicers over struggling students and defrauded veterans, and unfortunately, I could go on and on. But luckily, we have seen states, and in particularly California, led by AG Becerra, really step into this breach. From his litigation against companies like Navient for ripping off millions of vulnerable borrowers, to his lawsuits against Betsy DeVos for failures around the Public Service Loan Forgiveness Program, or relief for borrowers ripped off by predatory schools. Also advancing and encouraging strong legislation like the Borrower Bill of Rights and the California CFPB, over and over again standing up where DC is failing. But too often these efforts have been greeted with obstruction and opposition by the Trump administration, throwing sand in the gears of efforts like AG Becerra's and his colleagues in state law enforcement and regulators, and too often, even in cases, blocking efforts to seek borrowers getting justice, all the while arming industry to make unprecedented claims that they are above the law. So when we talk about 2021 and actually solving the student debt crisis made worse by this president and the administration, we know there's so much to do, from making college more affordable to canceling debt for struggling student loan borrowers to empowering a CFPB who actually does its job. But also we must necessarily talk about how we overturn these efforts to stop the progress we have made in the states and through the tireless leadership of folks like AG Becerra. So with that, I want to turn it over to Attorney General Becerra, a true champion for student loan borrowers, to talk about student debt, his efforts in the states, and then ultimately Jonathan Glater will lead a great discussion today. Attorney General, thank you so much.
Seth, to you and to all the work that the Student Borrower Protection Center has done, a big shout out. And please tell all your team that we are so proud of the work that you've done. These last 4 years, you all probably have been working 24/7, and thank God because at the Department of Education, we haven't seen a secretary that's been working 24/7 on behalf of students. And in this Trump administration, we haven't seen leaders who've been working for students. And unfortunately, too many of those institutions out there that should be working on behalf of students, Ashford University, a predatory for-profit, Navient, a loan servicer that's taken advantage of students, they're all taking advantage. And that's why it's so important that, Seth, you and your team have been out there working so hard. And we hope that at the Department of Justice, we can join with you every opportunity to just do what we should. Because at the end of the day, this is really personal. I suspect each and every one of us will take the speaking today, at some point borrowed money to pay for our college education. I know I did, and I know my daughters have. And so it's one of those things where it is personal. And when you have a president and a secretary of education who seem to have something personal against us, it hurts. It really hurts. And so you mentioned more than 40 million Americans who have outstanding, in some cases crushing, student loan debt. $1.7 trillion. California, four of those 40 some odd million are from our state of California, students with debt. They collectively owe some close to $140 billion in student loan debt. It gets in the way of everything. Being able to change jobs, being able to find a good job, being able to finish your education, any number of things, even including your relationship with your loved ones and your potential spouses. It's just tough. But let me just close, because there's so much to talk about and I'm interested to hear questions. But let me close with a couple of other numbers that too often get ignored or are never really known. First one is how this impacts certain of us. It is a disparate treatment when it comes to student loans. Black students take on about 85% more debt than white students in America. And the worst part about that is the disparity actually grows only worse after graduation. Another statistic that I think I'd like to just leave with you, because this one really shows how much is at stake. Here in California, in our UC system, the University of California system, which is recognized as perhaps the best college upper level education system in the world, within 5 years of graduating, the majority of our low-income students who attend UC schools are already out-earning their parents within 5 years. Let me put it to you a different way. About a third of those low-income students, when they go get that education and finish up, they move from the bottom 20% of the economic ladder to the top 20% of the economic ladder within 10 years of graduating. That's mighty. The difficulty is more and more of those students are finding that they are having to borrow money and they're being crushed by debt. And so, yeah, this is important. This is personal. But for a lot of students who for the first time are having a chance to be in college, never before having had that experience, for those who have had opportunities to escape the discrimination that their parents faced, this is big. But when you all of a sudden find this ceiling coming down on you because of financial debt, and it should be for all of us. And that's why it's so important to deal with it and have champions who deal with it. So I'm glad, Seth, that you've invited. Look forward to the question. Let's get to it.
Okay, thank you both. Thank you to the Student Borrower Protection Center and to the AG's office for inviting me to participate, and thank you especially to our audience for tuning in. My name is Jonathan Glater. I'm on the faculty at UCLA School of Law, where among other things I teach education law. And you have both already given kind of a roadmap to the kinds of questions I want to ask you about, noting that student debt is a millstone nationally, more than $1.7 trillion outstanding. That's such a big number, though, that it obscures the individual impact that both of you have alluded to of that monthly payment, a few $100s, whatever it might be, confronting a former student who's now coping with a global pandemic and a very difficult job market. And beyond that, General Becerra, you've already alluded to, in California specifically, there's a disproportionate effect of this debt burden on students who are Black, who are Latinx, who are first gen. And I'd like to start by maybe making this real for people in a concrete way. So I want to invite you both to talk a little bit about how does student indebtedness affect or complicate the lives of borrowers and their families. And in particular, General Becerra, you mentioned that the disparities grow over time, right? It's like compound interest of the most undesirable kind. And I wonder if you could say a little bit about the consequences for students with debt, who've invested on the premise that they will get the benefits of higher education that we all emphasize. And then when they finish the course of education, they find, as you put it, this crushing burden getting in the way of achieving their dreams. So how do these disparities compound? What are the effects?
Well, I'll start with that and just simply say this. When you have to make a decision between paying your student loan debt or trying to help feed your family, that's not good. When you're having to stay put in a particular position, even if you've been offered something more attractive, but you can't afford to make the move because of your student loan debt, that's not good for America. And when you start to have marital issues, family problems, because that crushing debt is getting in the way of dealing with all the affairs of the family in ways that financially are just becoming straining, that's not good for anybody. And so beside the fact that it's tough to pay back a loan, especially if you maybe were taken advantage of because you went to a school of some predatory for-profit that only gave you a piece of paper and you had to ultimately go back to a real institution to get your degree, but you're saddled now with all that debt. It is tough to climb that mountain. And so I simply will say that we should never impose upon our future generations a constraint on reaching for the sky simply because school education has become out of reach financially.
And I think just to add to what General Becerra, brought up originally too, I think what we see is, there are tens of millions of people with student loan debt, and this touches every corner of the country. But what we know is that there are certain communities that are hit harder. And you raised this, Jonathan. We know that in particular, the communities just being crushed by the fallout of the pandemic are the same ones who are bearing the brunt of the student debt crisis. So these are African-American borrowers, Latinx borrowers, and there is just remarkable analysis which shows the dangers of student debt kind of migrating from kind of individual borrower circumstances in terms of how that impacts them around the kitchen table. But in my mind, where this gets really scary is when you start to see the ripple effect on individual communities. So, for example, in the Bay Area, communities with the largest percentages of Black and Latinx residents had delinquency and default rates 3 times more than their white peers. And you see that up and down in California and in cities across the country. And what you really see here is how student debt is like kerosene on the fire of all of these problems that we know are just ripping apart our communities. Income inequality, racial inequality. And if we're not talking about the impact of student debt or dealing with it, then we're not really truly tackling those problems.
You've both also already alluded to the ways in which student debt, it's clearly not neutral, but beyond that, it's often predatory, right? There are beneficiaries of the inequity that you've just described. And I know that the Attorney General's office has been involved in an investigation of for-profit education chain Corinthian, also actions against servicers that or at least one servicer that you alluded to a moment ago in connection with their conduct of business. And I wonder if you could tell us a little bit about Corinthian's collapse and how that collapse also, right, contributes to the harms of indebtedness and the disparate harms of this indebtedness.
So, Jonathan, it's like climbing a house of cards that finally collapses. fall you take is big. And when these houses of cards, as many of these predatory for-profit institutions are, collapse at the point at the top of the hill of those cards, you're going to find a whole bunch of minority students, first-time college goers, military service members, people who haven't had a tradition of college education in their family backgrounds. And so they're less educated on what it takes and how to do this. And it's easier for them to fall prey. We are suing Ashford University because it essentially ran a mill where they were essentially trying to enlist people to apply to their university, so-called university, rather than students soliciting them. They were soliciting people to come. Of course, what made you the most attractive student wasn't your academic background or your show of success growing up. It was if you qualified for a good loan. And of course, then they could take full advantage of those federally subsidized student loans. You know, whether you got educated or not, after they sucked your loan money out of you, they were in pretty good shape. And of course, when the cards collapse, who takes the hardest fall? It's those students. And the worst part is, you know, you wish you could at least say, well, at least I lived with 2 years, 4 years of a college education that I can now use to help pay for that debt. Unfortunately, many of these students are finding out that that diploma was worth less than the paper it was written on. And now with that debt, they got to start over. And in some cases, they used up some of their eligibility for loans. And for service members, this is where I think it's really egregious. For military service members who have the GI Bill and are therefore very attracted to these private for-profit predatory institutions, it really does, it's offensive how they take advantage of military service members who can't oftentimes leave base, who have to sometimes do these things online, who have to depend on that kind of institution, and then they find that they have nothing left. And if you don't make a lot of money while you're in the military, and if you start to use up your GI benefits, when you get out, you've got debt and not much left to go out and get yourself a real education. It really hits them hard.
Seth, did you want to build on that?
Yeah, sure. I think you have to look no further than all of the Attorney General's work over the last 4 years, just to show how deep the problem of predatory actors in the student loan market is, right? You have for-profit schools ripping off borrowers. You have servicers padding their own profits by denying borrowers access to repayment options, which would be their financial lifeline. You see, predatory private student loans. You see the Department of Education make every hurdle under the sun and roadblock so borrowers can't get PSLF. And I think this is kind of the underappreciated aspect of the student loan market, which is, on one hand, there's all of this historic debt. And I think a lot of times that's what people focus on. But on the other hand, there are all of these predatory actors and practices that target people, and the only thing they have done in life is taken on debt to chase the American dream. And I think that's why I think you can't have one part of the conversation without the other, because, in just a single lawsuit, the Attorney General has alleged that Navient added billions of dollars of needless debt onto the backs of Americans. So on top of what they took out originally, they're stuck over and over again paying bills they shouldn't pay, not getting forgiveness they should have gotten. And I think this is just a portion of the student debt crisis that hasn't gotten enough attention. But only really through the efforts of state law enforcement officials do we really see the depths of these problems.
That's a great segue to the next question I wanted to ask about, which is that there is a web of state consumer protection laws that are supposed to protect us when we are consumers of credit. And one of the complications of making students finance their own higher education is they're consumers of debt in order to do that. When we borrow, we're supposed to be protected by these state laws. And in the case of student borrowers, the laws govern how students or how servicers deal with students. And the servicers, of course, are the companies hired by the Department of Education to manage payments, to keep track of loan balances, and the like. So, General Becerra, my question, building on Seth's observation, is can you tell us a little bit about, in a little more specific terms, about how your office has tried to use state consumer protection law to protect borrowers dealing with the kinds of practices Seth has alluded to? And relatedly, I'm going to pile two questions together here. And relatedly, about AB 376 to protect student borrowers in their dealings with student loan servicers going forward.
And Jonathan, your question reflects the fact that the federal government has been AWOL in providing protections, whether it's the Department of Education, which you would think would have the best interests of students in mind, but doesn't, or the Consumer Financial Protection Bureau, which has the legal authority to protect student consumers, abandoning that role. And in both cases, it seems like the industries that are really exploiting students are the industries that are supplying some of these agencies with the people that are now running some of the operations of these agencies. And it's really disheartening to see the degree to which, and certainly Secretary DeVos, the degree to which they have stepped over people to try to get the very people in their shop that have caused some of these problems. And so what we do in California is we'll use whatever tool we can. Right now, the federal government is trying to keep us, states and state law enforcers, from having jurisdiction to take on some of these cases. They're saying, they say the federal government preempts the field in some of these cases, and they don't want us anywhere around in trying to do enforcement and oversight. We're going to do it. And fortunately, in California, as you mentioned, we do have some laws that are go above and beyond the protections that some other locations have. And so we'll use whatever tool we have, whether it's our unfair competition law, whether it's our laws against fraud and deception, or whether it's new legislation that creates a student bill of rights and gives our students more protection and establishes a statewide in California, essentially as Consumer Financial Protection Bureau at the state level. We're going to work with whomever is ready to do this, because it is, I mean, the last thing you want is to have to worry about being ripped off for having gotten educated. And so, you know, we're gonna stand up on the borrower protection law that was created under the Obama administration. Those rules were meant to protect all those borrowers who got ripped off under Corinthian and who might get ripped off in the future by other predatory institutions, so that those borrowers aren't left in a lurch having taken out loans that were essentially transacted in fraudulent ways. We're trying to make sure that this administration continues to protect the ability of students to participate in the public service loan forgiveness program, which to me, that's one of the most offensive things. You go out there and you get educated, now you want to give service to the public, and you know you're not going to make much money, and it's going to be tougher to pay your loans. And all of a sudden you go through this program where you can have that loan forgiven, and you go through the whole process, 10 years worth, you think you've qualified to have your loan forgiven, and you get this message from the Secretary of Education saying, sorry, you didn't qualify. All of a sudden you've got this mountain of debt that you thought was going to be forgiven on top of you, even though you did everything the right way, giving service to the public in America. Those are the kinds of things that we're going after. That's why we've had to sue Navient. That's why we've had to sue Ashford University. And that's why we've had to sue Secretary DeVos several times.
Seth, I want to make sure we explain, I'm taking off my law professor hat for just a moment here. This concept of preemption, of course, is something that we throw around intuitively. Actually, I'm just going to say it's not a terribly intuitive concept. Can you just explain briefly what the hurdle is that an argument about preemption puts in the way of efforts to enforce state law against these federal contractors?
Sure. And I don't want to sugarcoat this here. I think what you've seen out of the Trump administration and Betsy DeVos are uh, unprecedented, quite legally dubious attempts to argue that student loan companies are above the law, right? You know, I think we could dress it up in a bunch of different legal phrases and try to tie it to some sort of justification here or there. But at its core, what they are saying are these exceedingly large student loan companies. To give you some sense of size, we pulled the number. Navient has more than 500,000 customers in the state of California, servicing over $20 billion. FIA, more than 700,000 customers. And what Betsy DeVos has tried to argue is that those companies, because of their relationship with the Department of Education, could skate by free of the protections that the people of California provide to consumers of every other product. So the prohibition against lying to customers. Betsy DeVos says that the state of California has no authority to hold against these big student loan companies. The protections against false advertising or other deceptive acts. They have literally went to court. They have pulled out all of the legal stops to say folks like Attorney General Becerra, as the lead law enforcement official in the state of California, can't use these traditional tools that you could use against a mortgage company, against a payday company, against a debt collector, because somehow these student loan companies are above the law. And I think it is underappreciated. It's maybe underreported, but it certainly is totally offensive to the idea that like people like General Becerra can't actually stand up for the 4 million people in the state of California who have student debt if their student loan company lies to them. And I think what you really see here is an effort to throw sand in the gears, to obstruct, to object, and to try to figure out if they could get folks to move on and do something else while these companies pad their pockets. And I think we're fortunate to see like the steadfast and the tenacity of state law enforcement officials to fight through this. But it does have a cost. We've seen documents come out where Secretary DeVos has stopped a state law enforcement official from investigating violations of the Public Service Loan Forgiveness Program. And we've seen industry in state litigation, when individual borrowers have sued, wave around all of these statements that DeVos has said, and sometimes they have won. And I'm sorry to get heated, but I just find it so offensive to argue that somehow these companies are above the law simply because they're servicing a student loan.
You're kind of raising this next question in my mind, because you both have alluded to the kinds of consumer protection laws at play. Can you tell us about a little more specifically about what kinds of conduct you're seeing? I mean, this may also be useful to some of our student borrower viewers who might be on the receiving end of questionable conduct.
Seth, let you go at it first.
Sure. So, you know, I think what you're talking about here is unfortunately what we have seen time and time again when finance companies rip off customers, right? So in the General's lawsuit against Navient, you had a company to pad its own profits, steer borrowers away from repayment plans that could have helped them into forbearances simply because it was good for the company's bottom line, right? You've seen the same company, when they report information on disabled borrowers, including disabled veterans, do so inaccurately, ruining their credit. You've seen time and again in other law enforcement officials about companies that rip borrowers off trying to get public service loan forgiveness with shoddy practices, deceptive information. And this is like the bread and butter of consumer protection that folks like Attorney General Becerra have been trying to bring to stand up for borrowers. And the idea that the administration would take offense to that, you know, is just totally out of bounds of where we've been before.
And Jonathan, I'll simply add that These are not techniques that are new. They're not exclusive to this industry. What they do is they cut corners, they hide the ball, and they make it very difficult. Most students don't realize that they've been defrauded. They don't know that they were steered into a loan payment program that's going to end up costing them more money than the one that they were eligible for. They don't know that that university that has recruited you is asking you to pay an exorbitant amount in tuition simply because they know you've got loan eligibility, and then they can go ahead and squeeze you for all that money. And they don't realize that they're not really getting an education the way they would at least a credible nonprofit institution. And so what happens too often is that you go, and that's why I say a lot of first-time college goers get caught in this. They think this is it, and it's unfortunate, but it's as Seth said, it's offensive.
So a big part of the solution, it sounds like, is better information at a minimum, right? Better information needs to be easily accessible to student borrowers so that they can assess what they're getting from the servicer, right, or the school.
Jonathan, can I add one last?
Please.
Just so you see how insidious this can be. There were students, we got information about students who were complaining that they couldn't get their official transcripts after graduating. And when they would try to get the transcripts, some of these institutions would say, well, you still have outstanding debt with us. You haven't paid off all your loans or all your tuition to us. And we're not going to give you your transcript until after you pay us. Now, I got to tell you that if you owe money, you're going to have to pay it, right? If you really do have a bill. But withhold a degree, which could keep you from being able to get a job, that's vicious. And that's what was going on. And in California, we passed a law to say, you can't do that. You know, there are ways to get compensated if you're still owed money, but you shouldn't be holding somebody's lifeline after 2 years, 4 years of education in order to extract those monies. That's as predatory as you can get when it comes to debt collection.
Let me ask I want to follow up on my preemption question, my explanatory question. In this litigation around servicers, where the defendant, right, the party on the other side is the servicer, the education department, the federal Department of Education, is not a party. So can you either one? I'll throw this to either one of you. Just how do they intervene to make an argument that state consumer protection laws don't apply? How does that work?
Well, so I can hop in really quick, or General, you should go.
Oh, no, go ahead, Seth.
Okay, so I think what you've seen is actually a string of policy decisions, legal arguments, and even like policy documents that they've put out, essentially starting on day one. So first they published this document in the Federal Register, which purported to supersede all state law. This document has mostly been laughed out of courtrooms throughout the country, but it gives servicers a tool to wave around in court and argue that state consumer protection laws don't apply if they're sued by a law enforcement official. But we also see this come up a lot if individual borrowers are ripped off and they try to get justice for themselves. We've seen even more nefarious practices where the Department of Education has told companies like Navient, don't turn over any documents to any law enforcement official. If they ask you for documents about their conduct or about potential violations, you're not able to ever turn those over to attorney generals or regulators. You have to go through the Department of Ed. Turns out the Department of Ed was sitting on these requests for months and years, maybe not even turning them over. And then finally, I think one of the most egregious things, not to correct the law professor, is we actually do see them showing up in court sometimes. Like the Department of Education, who has staked their claim around states' rights and being deferential to states, has actually sent the Justice Department in to state courtrooms to argue that companies like PHEA, the Pennsylvania Higher Education Assistance Authority, are above the law and don't have to comply. So what you see is this complex series, which can really be boiled down to trying to use every tool the federal government has to try to shield industry from accountability over the abuses that they have partaken in for the last decade.
And Jonathan, I could just add two things. One, I mentioned it earlier. Some of the very executives that work in some of these companies that we've had to sue are actually now working in these departments. They've been hired by folks like Secretary DeVos to work in these agencies, the very executives that were in the institutions that we're suing. That gives you an idea of how, upside down this is. Secondly, California's had to sue the Trump administration over 100 times to stop them from violating the law. I make that point to simply say, is anyone surprised that they're making this outlandish argument that the federal government preempts the state from enforcing the laws? They do everything. They try everything. They just throw it on the wall and see if it'll stick. Fortunately, in most cases, we've been able to peel it off the wall. But you got to go out there and sue and take action, peel it off the wall. And that's where Seth and his team and some of the state AGs have been crucial to stop this outlaw behavior by the federal government and these industries.
So I stand corrected, Seth. I want to pivot slightly, and I almost feel silly asking this because you kind of suggested the answer already, but we've talked about the situation for California borrowers in particular. I wonder whether you could also talk a little bit about collaboration with AGs in other states who also have student borrowers on the populations they are to protect. And well, let me start with that. Opportunities for collaboration with other AGs first.
Jonathan, absolutely. And that's been one of the really gratifying parts of this job, is working with our other AG colleagues throughout the country. It's a great coalition and partnership. Rarely does California or any other state act by itself when we have to take these actions. And it's been one of the powerful reasons why we've had such success against this administration and these industries.
And maybe more importantly, this is a prospective question. What actions would you want to see? What kind of cooperation? Because it doesn't sound like there's a lot of cooperation right now with the Federal Department of Education, but what kind of cooperation would you want to see? What kind of practices would you want to see? What kind of actions would you want to see taken at the federal level?
Sure. Well, I'd like the Consumer Financial Protection Bureau to actually be a Consumer Financial Protection Bureau. I'd like the Department of Education to actually work to educate students, not profit institutions who go after students. Jonathan, it's not as if we didn't have laws in the books to protect students, to make sure everybody's doing these things right. It's just that this administration has decided not to follow the law. And so if we had just an administration that would follow the law, that would clear the decks of a lot of these just egregious actions that we've seen and make a lot of these industry players correct their activity. The other thing I'd say is we have to go a long way. As you said, we should not be creating a mill of consumer debtors. Those who go to college to consume debt. You go to college to get educated. And so, as I think, Jonathan, you pointed out, we should be striving to make sure we're graduating educated people ready to work, not consumers woefully in debt and constrained in what they can do to just go out there and be the best they can be.
Seth, you want to pick that one up too? I suspect you've got some specific ideas also. In particular, I'm thinking about public service loan forgiveness, but other kind of measures you'd want to see implemented at the federal level.
Sure. Like I said before, I think the ditch has been dug so deep that there's so much to do. But I think just to kind of keep on the focus of what we are talking about today, and I promise I would say this even if he wasn't on, but the state law enforcement community's push and work around student debt has really been, I think, the most important thing to kind of transform this conversation about protecting borrowers, the role of debt, the role of predatory players. And from for-profit schools to servicers, to borrower bill of rights. I don't think that any of that would have happened without the role of folks like Attorney General Becerra and so many of his colleagues. I think what you've seen, unfortunately, over the last 3 years is, Attorney General Becerra mentioned 100 lawsuits against the Trump administration. I think there's at least 4 or 5, right, just on student loans. Like, imagine if we could use all of those resources and all of his amazing staff to actually be on the same purpose of protecting borrowers against dealing with obstruction and tactics and illegal practices out of ed. So I think, we're going to talk about things like debt forgiveness. We're going to talk about cleaning up PSLF. But one of the things why I'm glad we're talking today, and I know we've been focusing on, is cleaning up a lot of the landmines that have been left for trying to actually treat student loans as a consumer protection issue and allowing, state law enforcement officials to go back to doing their job without also having to overcome arguments made by the Department of Education or landmines left to give industry the chance to try to blow up litigation. So I think, there are a lot of really high profile things we talk about when we come to student loan debt. But I also just want to get us back to the normal, boring soup and nuts of investigations and oversight and bank regulators looking at consumer protection issues. And that's going to take a lot of work. I think we're going to have to not only go in there and get good people, but proactively kind of pull out, by its roots, like a lot of the policies and legal documents and legal memorandum that the DeVos administration has put into place.
So I just have one more, and then I want to make sure to take some of the questions we've got from our audience. And this is really kind of the pragmatic use you can use question. Do you have suggestions or maybe warnings for millions of student loan borrowers in California on how best they can protect themselves from some of the practices you've described?
Let me jump in and I'll say just a couple of things. First, cover your behind. CYA is always a good admonition. And simply what that means is keep good records of what you've done. Keep names of people that you've spoken to, phone numbers. On the Public Service Loan Forgiveness Program, for example, make sure you've got your I's dotted and T's crossed on that everything you've done to make sure your loan qualifies for forgiveness. Because even if it got rejected by this Department of Education, you're going to have a chance to come back. I guarantee you. We've taken DeVos to court and beat them at this game. And when we have a new administration, I guarantee you a lot of these students will get relief. And so just really make sure you're documenting what you do. Secondly, make sure you know your rights. You do have rights. And in places like California, you probably have more rights as a student than in other places in the country. If you see something, say something. You see that motto up in the airports all the time. Well, if you see something, say something when it comes to some scammer, some predatory college, some loan servicer that's taking advantage of people. If you see something, really say something. And then finally, use your best judgment. Don't go to disreputable or less reputable institutions or entities for help. Go to those you trust, and that way you avoid going down the wrong path from the beginning.
Seth, did you want to add to that?
Yeah. So I think the only thing I would add, I think just to jump off something General Becerra said is, if you feel like something is wrong, file a complaint, right? I feel as if half of my life has been trying to tell people about the power of consumer complaints. If you think your school has ripped you off, if you think your student loan company has ripped you off, file a complaint with the CFPB, with the Attorney General of California, with the regulator of schools, file with all of them. And I think what you see is that people are really hesitant to do so. But it really is, I think, the best tool for individual consumers to fight back against predatory practices. And I think one of the things, if you ever sat inside a regulator or law enforcement office, is those complaints aren't just about individuals. Because if something is happening to you most likely it is happening to tens, hundreds, even thousands of people. When you see the size and scope of some of these predatory schools, or how many billions of dollars these student loan companies handle, we often see mistakes that could lead to literally billions of dollars in problems. And a lot of the investigations, a lot of the lawsuits, a lot of the recovery was really premised on 3 or 4 people just raising their hand and saying, this is what's happened to me. So if you feel like you've been ripped off or you haven't gotten good information, know there's people out there who want to help and who can help.
Okay, thank you both so much. I'm going to pivot now to some of the questions from the audience here, and one of them seems to follow quite naturally from what I just asked and your answers. How will the new California legislation, this is AB 376, what effect will that have on day-to-day experiences of student loan borrowers?
I don't know if it's going to have an effect day to day, other than to say it gives you more rights. It gives you a better opportunity to ensure that if someone is taking advantage of you, you'll have recourse. But it's still up to you. You know, borrower beware, buyer beware, borrower beware. It's still up to you to make sure that you're taking care of business on your end. But having certain rights and being able to enforce them helps out quite a bit. But you know, there's no law is going to be a fix for everything. And so please, this is really up to you, and help us help you.
Yeah, and quickly, the only thing I'll add to that, and I think because of a lot of hard work of literally dozens of advocates in the state, of Attorney General Becerra's leadership on this, is California took some really important steps with their borrower bill of rights. And I think to boil it down, you know, if you have a student loan, you often have less protections than someone with a mortgage or a credit card. So what the architects, what the advocates, what the champions of AB 376 did was say, let's look what happens if you have a mortgage and your loan gets sold, or what happens if you have a credit card and you make an extra payment. Because if you have a student loan, you should have those same rights and protections. And over the opposition of the student loan industry, over the opposition of some pretty big banks, student loan borrowers actually won, right? And they won because they had really, really strong champions in their corner. And I think now is, you know, now we're going to see the bill implemented and acted upon. But Attorney General Becerra is correct. I think it's also going to be incumbent on people, if they feel like they've been ripped off, if these companies aren't effectuating their rights, to stand up, because there are new powers for Attorney General Becerra to go after these companies, for individual borrowers to go after these companies. And I think, you know, the phrase is, as goes California, so goes the nation, right? And I think we're going to see, hopefully, student loan companies realize, if we're offering something to a borrower in Sacramento, are we really not going to also offer it to a borrower, you know, in New Jersey? And I think the thought is here, maybe this is the type of legislation that can really bring up the floor for the whole country. So I think it's a testament to General Becerra's hard work for 4 million people in California with this bill, but hopefully 40 million people also get the benefit as well.
And Seth, just to follow up, are there resources you would point student borrowers to learn more about the details of what their rights are, right? What protections are available to them?
Sure. So, you know, you can always check it out on protectborrowers.org, on our organization's website. I promise Jonathan I didn't put him up to that. No. But I think you're also going to see much more information coming out of the Department of Business Oversight, I'm sure out of the AG's office. You know, the bill was just signed late last month by the governor. But, you know, I think it's a really exciting time. You know, there's going to be a new advocate in the state just solely focused on student loan issues. So I think, you know, with everything kind of going on in Washington, I think looking to what's happening in California, I think there's reasons to be, you know, optimistic for student loan borrowers.
And this next one's for you, General Becerra, or I'm interpreting as, it asks, what can other state law enforcement agents and regulators learn from your experience confronting this administration, and what should they keep in mind as they try to crack down on predatory businesses in their jurisdiction?
Probably that, as arbitrary and capricious as some of the actions that this administration has taken, do not be shocked when they come at you with something that's even more extreme, and be ready. Maybe it was helpful that I had 24 years experience in Congress before I became the Attorney General here. And I had dealt with some of these issues at the federal level before, including the Consumer Financial Protection Bureau, the Affordable Care Act, a number of things. And I told my team when I landed in this position, get ready, because if candidate Trump follows through on a fraction of what he said as now President Trump, we're in for a really wild ride. And so we have always been preparing. And so in this space, when it came to protections for students, protections for borrowers, having worked on a number of these agency issues beforehand, we brought that to the table to our team and said, okay, where could they go? What might they do? And that's why we've been able to counterpunch faster than they've been able to punch. And that's what it takes sometimes to knock these guys off their kilter, because they don't stop. And you have to let them know that as they start to wind up that punch, you've already landed your counterpunch.
And the last question I have here from the audience is kind of a more aggressive version of the question I asked you earlier, which is what is the single most important action a new administration in Washington could take in 2021 to protect borrowers? And I'd like to put that to each of you.
Wow. Seth, go.
Sure. So I think kind of a cop-out, but I think the most important thing is realizing and rebuilding the partnership with state law enforcement officials. I think, I spent some time in the federal government thinking about how to reform and clean up the student loan market. And it became apparent in a matter of seconds that it is impossible to do so without a partnership, without the teamwork, without working hand in hand with state law enforcement, state attorney generals, state regulators. And I think that's why what you have seen from the administration is so wrongheaded, which is the idea that instead of working with these folks to try to go after the full litany of predatory actors, you're going to somehow preempt them. So I honestly think that one of the first actions of a new administration is to think through all of the steps that the VOS has taken to kind of harm the partnership, to throw sand in the gears of allowing state law enforcement officials to do their job. And on day one, reestablish the idea that if we're going to actually protect 45 million people carrying $1.7 trillion of debt, it's going to take every state AG, it's going to take every bank regulator, and it's going to take a federal government who realizes that these are the people on the front lines that are actually doing the hard work to protect, people who are struggling at the hands of predatory companies. So hopefully that somewhat remotely answered the question, Jonathan.
Yes.
And Jonathan, I would add, I'd sort of pick up on what Seth just said, and because I agree with him on working with state enforcers, because you're essentially expanding your reach at the federal level if you're working with your state enforcers to get it done. But I would say that, and it's a tie for me, I'd say doing aggressive oversight by reinstituting the student, Seth, what was the name of the office at the CFPB? Was it the Student Borrower Office?
Yeah. The office for students and young consumers.
Yeah, that was eliminated by this administration, and restoring it, and then really putting good people and giving it teeth, that would be crucial. And if I could also say, as we try to do real oversight of the for-profit institution industry, we really have to go after those that try to make a buck off of getting you to enroll in their institution. It's a terrible concept that where your emphasis and your goal is not to educate, it's to make a profit off of students and their families. I think we have to revisit the whole concept of that.
Thank you both so much. I want to make sure and give each of you a moment for any closing remarks that you might want to make, but I really appreciate again being invited to participate and the conversation about student indebtedness and the consequences. Thank you.
Seth, you're the real champion here. You know this better than any of us.
Oh, no. I just wanted to thank everyone who's watching on Facebook. I wanted to thank Jonathan for moderating and for all of his work to help student loan borrowers. And of course, thank Attorney General Becerra for taking some time out of his very, very busy schedule to join us today to talk about these issues, and for all of his really stellar work to protect student loan borrowers over his tenure as Attorney General. You can learn more about a lot of these at protectborrowers.org. We just put out a paper about a lot of these topics. The last word to Attorney General Becerra.
Well, first, I just want to say, Jonathan, thank you very much for moderating this and asking great questions, and for all the work that you've done. Seth, to you for just being a champion and never letting go. I mean, just deciding to really make this your focus and your mission. I think it's great. Let me give you a quick analogy here. I'm not a really good swimmer. Sometimes when I'm thrown into the deep end in the water, whether it's the ocean or a river, you want to come out of that deep end as quickly as you can, and so you're out there trying to get to the surface before you run out of oxygen. And I got to tell you, there are a whole bunch of folks like me who never knew what it was like to dive into the deep end of the water, because their parents never got to. They didn't have a lot of family members who got to go to college, and it's an experience. If you're not a good swimmer and you're in some really deep water, you can start to panic, and things can be tough. It's no different when it comes to being a newbie in college and having to borrow money. You're in that deep end of the water, and sometimes it helps if you've got people who can coach you, can give you some sense, who are there to show you how to do it. And when you don't, you can get yourself in trouble. And as much as you might want to learn how to swim well, if you don't get that practice and if you don't have that good coaching, it gets tough. Well, we should not let a lot of especially our first-time college goers, especially our low-income college goers, drown in that water of that debt. And I hope that we understand that, like that statistic that I mentioned about all those low-income kids that end up going to UC college and university and then come out of there, and in 5 years they're out earning their parents, and in 10 years they've gone from the bottom 20% on the economic ladder to the top 20%. We'll recognize that there are a lot of these kids right now that are deep in that water and they need our help. And so that's why what Seth does is critical. Jonathan, the work you're doing, and my AG colleagues and those of us who are enforcers, we have the privilege to try to work on this. There are a lot of kids, when they surface, man, are they going to launch. And so let's help all those young Americans be the leaders that we're looking forward to.